This is AMU's Trading Bootcamp. If you've been wanting to become a profitable trader, then this is the best place to learn how. And by the end of today's lesson, you will have a better understanding of momentum trading. Let's get straight to it.
What's going on, guys? Welcome to today's lesson. So today I'm going to be focusing on momentum trading. So momentum is a concept that all traders need to understand, especially if you want to be a successful day trader. It is something that I do every day. I trade breakouts, I trade bounces, rejects off of strong momentum stocks every single day. So there are some key concepts that you need to understand if you're going to be a successful momentum trader, and that's exactly what we're here to learn today. All right, so let's get started. First, what is momentum in trading? So momentum can be defined as the rate of change of price of an asset with respect to time. Okay, so in this picture here, I have three stocks. All right, one is the green stock, the red stock, and the black stock. All right, now just by looking at this image, you can clearly say that all these three stocks are on an uptrend. They are moving up over a period of time. But if I were a day trader, I'd prefer trading the green stock because it's moving at a much quicker rate, right, than the other two. So let's take an example. So if this green stock, let's say it makes a $10 move in 20 minutes. The black stock also, it makes a $8 move in 40 minutes. And the red stock here makes a $5 move in 1 hour, right? So just by comparing these three stocks, I'd be more inclined to trade the green one because not only it moves a lot relative to the other two stocks, but it makes its move a lot quicker. When trading options, you want the stock to make a move quicker, right? You don't want the stock to stay chopping around in range because you stand to make more money when the stock actually moves, right? Remember, derivative instruments, you make money only when the stock price moves quickly in the direction of your favor, right? That's why we prefer strong momentum stocks because they don't stay around, they don't chop around, they just move, right? Whether it's moving up or down, they move with great pace, right? So that's what we call as momentum. So when someone says strong momentum, it means that the stock is making a quick move in a very short period of time. If someone says weak momentum, it just means that the stock is making a very small move within a prolonged period of time, all right? So how do you go about reading momentum, right? Now, there are many ways to reading momentum. Number one is using indicators like momentum indicators, but the most important way you can read momentum is through candlesticks, that is by watching price action, right? All of us, when we start out our trading, all of us mostly watch candlesticks to observe price action, right? So it's the easiest way to see momentum increasing and decreasing, and that's what we'll be focusing on today, right? So candlesticks provide a lot of information. Number one, it gives you the OHLC. What is OHLC? It gives you the opening price, the high, the closing price, and the low, right? Open, high, low, and close is what we call as OHLC. And it also gives us the range of that period. So it gives, if you see a candlestick, you can clearly see the range, the lower range and the higher range, right? And the range between those two points, right? Candlesticks also tells you who's winning the battle. So are the buyers in control? Are the bulls winning the battle? Or are the bears winning the battle? You can clearly gauge the sentiment of that particular period, right? This is very important information, right? You want to know if the momentum is going still strong or if it's going to be reversing anytime soon. That's very important to understand the sentiment behind these candles, right? So that said, you all know already about candlesticks. But does candlestick tell you anything about momentum? The answer is yes, right? So what is momentum? Momentum can be thought of as the rate at which price changes over a period, right? If momentum is fast, we say price moves quicker. If momentum is slow, price moves slower. So by comparing one candlestick to the other, you can easily say if momentum is increasing or decreasing, right? So I'm going to quickly jump to the next slide. So I want to show you guys some image, all right? So in this case here, let's say this candle over here is a $2 candle. Next candle here is a $4 candle. The next one here is a $6 candle. Next here is $8 candle. Now what is happening here? Over a prolonged period of time, the length of the candle or the range of the candle continues to increase. What is momentum? Momentum is defined as the rate at which price changes. So by just looking at this candlestick, you can say that, right, as time progresses, the range of the candle increases, the momentum increases, right? That is exactly what momentum is. You can compare momentum by comparing one candlestick to the other. So if price range is increasing over the period, then momentum is increasing. If price range is slowing down, or if you see momentum shrinking, then momentum is slowing down. Okay? So before I jump to this slide, I want to show you all a small cheat sheet, right? So in a strong momentum stock, I want to see this number 1 candle and number 4 candle. Now, why do I say that? Let's break down the psychology behind these candles. Now, number 1 candle here, what's happening? It's a whole bodied candle. The stock price opened here, bulls were in total control, right? And the stock closed near the highs, right? So there is no room for bears exerting any kind of pressure. Bulls totally won the battle. They bought the stock up from the lows and closed near the highs. The second candle here, what happened? The stock opened near this low point. It went as high as this point, but then the sellers took control. They smacked, they sold a lot, and the stock actually was pushed to close near the lows, right? So in the stock, although the period ended green, right, sellers are prowling here, and they may take control pretty soon because momentum here is slowing down. The stock did not close near the highs. And what is this candle? Stock price opened here, created a low, so he went as low as here, went as high as here, and closed near the middle. So this is what we call as an indecisive candle, right? In an indecisive candle, neither bulls nor bears won the battle. It's up for debate. The stock could really make a reversal, or it could continue moving the next candle. So there's a really tight situation here. Anything goes after this candle. But one thing is for sure, momentum is definitely slowing down because there is a battle going on. If bulls are really in control, you would see one of those whole-bodied candles, right? The next candle here, the stock price opened here, and then it went as low as here, and went as high as here, and closed near the highs. So in the case here, bulls were in total control, and they took control of this period, and this momentum is very high, right? Number 5 is also an indecisive candle, and this is really a candle that usually shows up when momentum is either slowing down or a reversal is in sight very soon, right? So if you're in a bullish trend, what you want to see as a momentum trader is candles number 1 and 4, right? And if you're a bearish trader in a downtrend, you want to see candles number 6 and number 7, because this number 8 is an indecisive candle. Number 9 is a reversal candle because it looks like bulls are going to take control. And number 10 here again is an indecisive candle. Okay? Now, I wanted to cover this because it's important not only to know how to read candlesticks, but it's also important to learn to gauge the sentiment of each candle. All right? Now, let's go over the characteristics of strong momentum price action and weak momentum price action. Now, let's start with the strong momentum one. So, there are a few rules that you absolutely need to remember, right? So, I'm going to go over 3 rules and make sure that you etch this into your brain, because when you open a stock chart and you're in a momentum trade, these rules are what's going to help you stay in the trade, right, longer and try to catch every piece of momentum, right? A lot of traders, they enter into a trade and they don't know when to take profits, when to exit, right, when to hold on, because they don't know what to look for, right? The candlesticks actually tells you all this information. If you know how to read momentum, you will know when to stay in the trade and when to get out of the trade, right? So let's learn about strong momentum price action, right? So rule number 1 is presence of wide range candles. So we say wide range candles because wide range candles, like I said in the previous slide, they are indicators of strong momentum, right? So in this example here, you see a $1 candle, $2 candle, $3 candle, and then we have a $5 candle, right? As time progresses, you see the range of candle increasing, and as long as it continues to increase, momentum is very, very strong, right? So this is what you want to see in a stock. You want to see range of candles increasing and momentum increasing. This is absolutely a very good sign, right? Now, people usually, what people usually do is they see it, they are in a trade and they see this happening, right? They don't see that the range of the candle is increasing. All they see is, oh, it's a green candle, maybe it's going to pull back soon, maybe it's going to pull back soon. It may pull back, but the range of candles continues to increase. So The chance of the momentum slowing down is not yet shown. Momentum is still very, very strong, so you don't have to exit the trade, right? Even if it pulls back, chances are very, very high that bulls are going to buy the next dip because everyone's looking for a discounted entry. But as long as momentum is still strong and you see those wide range candles, you are very good to still be in the trade, right? And the next sign that you want to keep an eye on is increasing thrust as trend progresses. So thrust is nothing but the distance between swing highs in a trend, right? So you can see in this chart we have swing highs and swing lows, and T1 represents the distance between swing high number 1 and swing high number 2. T2 represents the distance between swing high number 2 and 3, and T3 represents the distance between swing high 3 and 4. You can see here that as the trend progresses, the distance between the swing highs continues to increase, right? It's the same thing as the wide range candle, but the sentiment here is that every time the stock breaks a high, right? So for example, if swing high 1 is here, every time the stock breaks the swing high number 1, it creates a new swing high. But every time it breaks, the distance between the swing highs continues to increase. Now this is a very, very good sign for a momentum trader. It just means that every time the stock breaks out, it just creates a new high that's much bigger than the previous high. It just means that the momentum is just continuing to increase and increase. As long as the market gives you the reason to exit, to see signs of momentum slowing down, there is absolutely no reason for you to get out of such a trade, right? And the last sign that you want to keep an eye on is depth of pullback or retracement size decreases as trend progresses, right? Now, what do we say? What do we think about pullbacks? Pullback is something very common, right? Trends are made up of swing highs and swing lows. When the stock pulls back, it creates a swing low. But you want the stock to, the pullbacks that's created by the stock, you want it to be very, very small. Now, you may ask me why, right? When a stock creates a small pullback, it just means that buyers are so interested in buying that dip that they do not allow the stock to dip, to make a big significant dip, right? The smaller the dip, they just buy it up, right? That just means that the sentiment on that stock is very, very strong. You see buyers are eagerly buying all dips, and that's exactly what you want to see in a trend. So if you see signs of big pullback, that just means that there is a lot more profit taking, and that's something you don't want to see. You want the candles to be big in the direction of trend, and you want the pullbacks to be small in the direction opposite to the trend, right? So in this example here, you can see that pullback number 1, DP1 is big, but DP2 is smaller, and DP3 is even more smaller. It just says that as time progresses, the pullback size or retracement size decreases as the trend progresses. This means that there are low number of sellers and buyers are very, very interested in buying all dips. Okay, so those are the signs of the strong momentum price action. Now let's take a look at this chart here. So Peloton, right, has been trading very choppily. It had its big drop and then it's been trading choppily for a couple of months, right? Once it forms this base around 95, it made a breakout here off of this 100 key level, right? So once it broke this 100 and 102, you can clearly see a resistance level here. It broke this level. You can see big candles forming, small pullbacks, then big move, some consolidation. The next day, it broke the pre-market highs again. Big move to 112, right? And 118 area, 118 to 120, you can see some small resistances here. So that's exactly where the stock rejected. And the next day, you can see a pullback started happening, right? But what I want you guys to pay attention to here is that one big range candle, smaller pullback, small candle, big candle, smaller range candle, smaller range candle, smaller range candle to market close. Market held pretty well. These are all consolidation candles. And the next day we had one huge candle, right? Now remember, this is the 1 hour chart. Once you have such a big candle, the next candle, you can see that there is literally no pullback. Because of the strong momentum, the stock continued to go up. Smaller consolidation candle. This is actually considered the pullback candle. The big momentum, and this is the rejection candle. You can clearly see the hourly candle. What did I tell you about the candle strides, right? All these candles, this is a wide range candle. This is a pin bar. This you can see a small sign of selling. This you can see a small sign of selling with range, very, very small range. This is the rejection candle. You can clearly see a sign of reversal. Now after this, what happens? The stock didn't just go up, right? It just, once the reversal sign printed, the stock started pulling back, right? Now, if I jump to the 5-minute time frame, you can see this stuff more clearly. right? So you see one wide range candle, another wide range, another wide range, then we hit a level. So 108, the stock made a $4 move without pullbacks, some consolidation to 114, made another $2 move, then consolidated, dropped to the same support level, then it made a slow, grindy price move around lunch hour to this resistance level where it started rejecting, drops to 114, right? And then market closed. Okay, so that's how you kind of read price action. You always need to pay attention to the range of the candle, right, during the period. And when the stock is approaching key resistance areas, you need to be paying attention to signs of rejection, right? Now stocks, no matter how strong it is, it's not going to keep going up or keep going down, right? At key levels of support and resistance, people are bound to take profits, right? Especially if it's a strong uptrending stock. You need to be paying attention for reversal signs. Now, if the reversal sign is not there, then the stock is more likely to break that resistance and continue its movement. But if you see signs of reversals, then that's your time to take profits. Okay? Speaking of signs of reversals, now we're going to pay attention to weak momentum price action. So, just like how strong momentum, the principles of strong momentum price action helps you stay in a trade, the signs of weak momentum price action helps you get out of the trade. So if you see something fishy happening, if you see signs of reversal, if you see momentum slowing down, you don't want to overstay your welcome in a trade, especially as a day trade. You don't want to give back profits. So if you see signs of reversal, it's best to take profits and wait for your next opportunity, right? So what are the three different rules for identifying weak momentum price action? Number one is presence of weak or narrow range candles, right? So in the same example, you see a $6 candle, then you see a $4 candle, $3 candle, then you see an indecisive $1 candle. Now, what is this telling you? As trend progresses, momentum is slowing down. If I go back to the previous example, what is happening here? As trend progresses, you see all these candles, all these indecisive 5-minute candles. You can see it, you don't see that here clearly, but as the trend progresses, you can clearly see the sign of weakness here, right? All these wicking, the range, there is clearly a lot of profit taking that's happening here, right? That's a clear sign of weakness, okay? And next is decreasing thrust as trend progresses, right? So as the trend progresses, you will see that the distance between the swing high starts to contract, right? It's the same thing that you saw in the candlesticks here, it's just represented in a different format. If you see the distance between the swing highs contracting as the trend progresses, that just means from a psychological standpoint that the stock is struggling to create new highs, right? So when that happens, bulls are going to give up at some point and sellers are going to take control. 9 out of 10 times this is what happens. So if you see bulls retreating, sellers are going to take control and they're going to see some selling. What you want to do is, as a trader, if you see the momentum slowing down, if you see the swing high, distance between swing highs contracting, you want to secure your profits at that time. The next is depth of pullback or retracement size increases as the trend progresses. Now I already told you guys that you want to see pullback small during strong uptrends. But in the case of weak momentum price action, what's going to happen is you're going to notice a big pullback happening at some point. So if you see as the trend progresses, if you see big pullbacks happening, that's not a good sign. That's a sign that there is a lot more profit taking, right? So if there is a lot more profit taking, if there's more supply than demand, then buyers are going to struggle to regain control. And when you see that happen, the stock is going to make a big reversal. So in this example here, so you can see that the pullback is, this is a big pullback, then there's a small pullback, then this is even small, but then DP4 is a big pullback. Now, if I were to represent this pullback as a candlestick, this is going to be a big red engulfing candle. Now, the psychology behind a bearish engulfing candle is that after a bearish engulfing, price is going to go down even further. Now, if you see a candle like this, that just means that momentum got killed. So don't overstay your welcome in the trade. If you see momentum getting killed or momentum getting slowed down, just take your profits, because the longer you hold on to it, the more the chances of you giving back profits is very, very high, right? So now let's go over some examples here. So RH, Restoration Hardware, was trading in this big range, right? So what can you see here? So you can see that the stock after earnings had a big momentum. The stock made a move from 660 to 735. Then we had a couple of consolidation candles here, and then the stock pulled the rug, right? So I wanted to use a complex example like this because stocks do not move in a straight line, and sometimes they may not be so straightforward, right? So in this example here, you see the strong momentum, right? So the stock was it opened some kind of somewhat flat, but then it bounced and it created all these highs, right? Stock made a move from 690 all the way to 730, but then on the 5-minute chart you can see a lot of red candles here. The momentum actually got killed. Whatever momentum that was there in the morning open, it did not continue. It got killed. It chopped around, right? And then you can see this. It drew a small trend line. It broke down, right? And then it tried to break up again. I couldn't clear the resistance. It broke down, and then all day it traded choppily, right? Now, what's going to happen next day is, after making a big move like this, the stock couldn't continue, and it printed basically a lot of indecisive price action here, right? This $10-15. So the next day, what happened? The stock broke down to the downside, and it sold off and dropped to the previous level, right? So if you see signs like this, right, if this after a big move, you don't see the stock continuing that move after maybe 1 hour or something like that, then the stock is not going to move. The momentum got killed. Buyers are not going to make the stock go any higher, right? Chances are very high that you should just take profits and wait for your next opportunity rather than just holding on hope, right? And then next here is Tesla, right? So Tesla has been in a strong uptrend, but that trend line broke, right? That trend line broke, and an area of confluence on this trend line is the 740 area, right? So once this trend line broke and the 740 area broke, it's actually 750 area. 750 was the break of this trend line. There was a area of confluence here in the 750 and the trend line break. Then there was a very strong possibility of strong momentum price action. Now let's go to the chart on the 5-minute time frame. So Tesla, as you can see, when the market opened, it was very, very choppy, right? But where did the momentum actually come through, right? Momentum came through once the 750 level broke, and then once the 746 level was the trend line. 750 level broke, we had a big drop, a $5 drop here, and then we consolidated for a while. And once the trend line of around the 746 area broke, we had a big drop, $10-12 drop towards the end of the day, right? Momentum usually happens at key areas of confluence. It can be a resistance, it can be a support, it can be a trend line, it can be a moving average. But when those key areas break, you can bet that there's going to be a lot of volume coming in, and there's going to be a lot of strong momentum price action coming in. Now this trade was to the downside. We made a lot of money, but this is something that you need to be paying attention to as well. All right, now that's all I have for you guys. Thank you.